So local governments are seeing an increase of federal funds. Over the past several years since COVID, everyone's kind of seen an influx of federal programs and federal money. So that means there's a lot more single audits. So I want to touch on what a single audit is, how to get you prepared, and some of the common findings that our office is finding, and some tips and tricks to keep you feeling prepared for your upcoming single audit. So what exactly is a single audit? A single audit is an audit of the compliance requirements for federal programs. It is required by the federal government. So this audit is typically done at the same time as your annual financial statement audit, with a separate report that gets uploaded to the federal clearinghouse. It is important to note, though, that not every entity that receives federal funds has to get a single audit. The feds have set a threshold of $750,000 before you would need to receive an annual single audit. This threshold is based on federal spending. So some people get advanced awards that they get all the money up front and then they spend on those awards. The money that's received in advance doesn't count towards that spending threshold. It would only be anything you expended in that fiscal year. But it is important to note that that threshold will be changing. The feds are increasing the federal threshold effective October 1st of this year. It will be moving up to $1 million. So in the future, so any audits that occur after next year, after September 30th of 2025, will use that $1 million threshold instead of the $750,000 threshold. So that's a good change for some of the smaller entities that maybe just exceed that $750,000 in a year. They may not need a single audit in the future. So you'll hear a lot about a CFA. That is an abbreviated term that we use. What does it stand for? The Schedule of Expenditures of Federal Awards. Really all that is a schedule where you prepare and identify all your spending by federal program. You can see on the bottom of the right-hand side here, I have an example of what a CFA looks like, and this is what you would need to prepare, showing all of your federal awards. So if you look in the first column, you'll see the ALN number. That's the assistance listing number. So that would be the federal award number that is provided for a specific program. If you're not as familiar with that terminology, it was previously called a CFDA number, so you may be using those interchangeably. Then you move over into that middle column. When you do a federal program, you have to report it by awarding agency. So if you can see on the top, we have the Department of the Treasury and the U.S. Department of Health and Human Services. So those are the federal awarding entities. Those are where the money is coming from. So you would break down those programs based on awarding entity. You may have one, you may have multiple, but that's how you would break it out. And then you also need to break it out by either direct assistance or pass-through assistance. So direct assistance would be any of those awards that you're receiving directly from the federal government. So your grant award is with that awarding entity. And then obviously pass-through would be as if it's coming from somewhere else. So if you're getting money from the state, this example here shows that your pass-through funds are coming from the state's Department of Health and Human Services. So that's how it would be listed. If you're a city getting money from the county, that would be how that would be listed on that grant. And then you would move over to the next column, which is the grantor's number. So the grantor's number is typically going to be found in your grant agreements. So if you are not sure what that is, that would be the first place that you want to look to try to identify that. And then you want to report any of your expenditures. So all the federal expenditures for that fiscal year by program. It is important that you make sure that any federal spending goes on to the CFA. Even if it's small, you can see the bottom of this CFA. There's 2 programs that have $27 in combined spending, but every dollar that is spent does go towards that threshold. So even if it's a program that maybe will never be looked at based on size, you still would want to list that on that schedule of federal awards, because that will be used in determining whether you met the federal threshold, and it will have an impact on major program determinations. There is a column that would need to be added that is not being shown right now if you are moving money, or not moving, passing it through to another entity. So if you're a county that is giving money down to the city to spend for that federal program, you would show that that is passed to a subrecipient. That's a separate column, so it makes it easier for the feds to identify spending for the program and what is being spent by the actual grant recipient versus what they're passing through to another entity. So this CFA is going to be used by your auditor to help determine which major programs that they are going to be testing in your single audit. It's important to note, though, that that major program determination, there is consistency of how that is done between whether you're getting the audit from our office or if you are getting an audit from a private firm. The federal government sets out guidelines of how to determine whether a program is type A or type B, so if it's large or a smaller program, and whether it can be designated as high risk or not. And then they have thresholds for percent of coverage, so how many federal dollars need to be audited to meet the requirement for the single audit. So this will be used for doing that. Once your auditor determines what federal programs they are going to be auditing, they're going to look at the compliance supplement. So the compliance supplement is a document that is published by the Federal Office of Management and Budget. This is a document that they publish and update annually. It is broken down by assistance listing number. So if you were to Google the 2024 Federal Compliance Supplement, it would be a very large document. And then on the bottom, it would be broken down in numerical order by assistance listing number, so by federal program. So you would be able to access that online. For each of those compliance supplements, you'll see a table similar to what is on the bottom right-hand corner of this slide. What that is that is the breakout of all the potential compliance requirements that could apply to any federal program. So when they put the compliance supplement together, the feds go through and they designate what we call a pick six. So they go through and identify the 6 most important compliance requirements to them. So they're saying, hey, auditors, these are the 6 compliance requirements that we care about for this specific program. So that is what the auditors will be making determinations on the extent of testing they need to do in those areas. So that does not mean that there aren't other compliance requirements that might apply to you as a local government, meaning there's other compliance requirements you need to be meeting for that program. It's just for that specific year, the feds have not designated that as a compliance requirement to audit. Those are subject to change. They do update them annually. They like to add requirements, remove requirements. They'll change them sometimes. So you'd want to look, if you're looking at the compliance supplement, at the year that applies to the grant year you're concerned about. It is also important to note not every federal program has a compliance supplement, unfortunately. The feds don't put them out for some assistance listing numbers. So if you go and look and your federal program is not included in that large compliance supplement, it just may not have one. So what that means to you is that we would have to come in and look at your grant agreements, and we would have to do testing based on what are the compliance requirements that apply. So the pick 6 kind of goes out the window if there isn't a compliance supplement. But the compliance supplement can be a good tool if your audit programs, or if your federal programs, I should say, have one, because what it does is it breaks out the requirements by compliance requirement. So the big area that could be of help is the allowable cost area. It will break out what the money can be spent for. So it can be used as a quick checklist for you if you're not sure or you can't remember if it applies. Instead of always having to go back to that grant agreement, it can be another tool that is used for you. It also can help you understand the areas that the auditors are going to be coming in and looking at, and what the feds are kind of deeming the most important for your specific program. So what counts towards that federal spending? Kind of like we talked about before, you want to make sure you're including all federal expenditures, regardless of how large or how small a program is. A lot of the common programs we're seeing are things like impact aid, Title I, disaster grants, ESSER, or ARPA dollars. But you're likely getting a mixture if you're getting pass-through dollars of state or local dollars and federal dollars. So if you're not getting grant awards that are are identifying it clearly to you what is a federal expenditure versus what is not, reach out to that awarding agency. Last year we talked a little bit about some of the revenue replacement dollars as a result of COVID that the state gotten passed down to local governments that no longer had federal identity based on some of the federal requirements. So there could be some of that going on, as well as these federal programs that you're getting. So you just want to make sure that you're not reporting things that are not federal on your CFA or missing things. If that happens and a single audit is completed and your auditor identifies in the next audit period that maybe the CFA was incorrect, it could cause them to go back and change their single audit. If they wouldn't have met some of the minimum testing requirements, they wouldn't have had percent of coverage. In the example with the revenue replacement dollars, if that increased your spending, it could have completely changed the federal programs that needed to be testing. So it could have a fiscal impact to you. They could have to come back and re-audit things and reopen the audit. And obviously that is time and costly to you. So it is important to make sure that you are identifying that. So if what you're getting from the pass-through entities is not clear, just reach out to them and make sure that they're designating to whether that was federal or not. So how do you get prepared for the audit? We kind of talked about this a little bit. Look for the compliance supplement for your federal program. That can give you just some high overview areas that you need to make sure that you're complying with. Looking at your grant agreements, the grant agreements are going to specifically spell out things like period of availability, meaning when can you spend the money? When do expenses have to occur and spend it there? Reporting requirements. How much time do you have to submit federal reports and when are they due? What types of reports? Obviously, all the allowable cost elements, all of that is going to be contained in that grant agreement. So you're going to want to make sure that you look at that. The next part is going to be keeping all of your supporting documentation. This is huge. If there isn't support from an audit perspective, we can't really say that it happened. So in this instance, more could be a good thing. It'll never be a problem if you have too much documentation. It will always be a problem if you don't have enough. So a few good examples are if you're determining some sort of eligibility, if there's an eligibility requirement for your program, I'll use a state example, the Child Care Assistance Program. In order for people to receive funding, they have to submit applications to the state. There's income requirements, household requirements, all sorts of different things to determine whether they qualify to receive that payment. When the auditor comes in, they'll look at that payment and they'll see, hey, you paid for those services, but then they'll go back and say, did they go to an eligible person? So they would need to see that application, income verification, household size, any of those things that you did to say this individual, this entity, this project was eligible for that funding, to be able to say whether the costs were allowable as well. I touched on this a little bit last year. If you end up saying that a cost is not allowable, it gets identified in your finding as a question cost. Question costs aren't things that we really want to have in findings as a local entity. You don't want them to show up because the feds can come back later and say they want the money back. So if we give a finding and say you have $1 million in question costs, they do their due diligence, they agree with the auditor and say, hey, we don't know that you spent that money correctly. They could in the future come back and say, hey, you need to give us that $1 million back. Or they could offset a future grant and say, we're going to reduce what we are going to give you. So it's really important that you're maintaining any sort of documentation to support all of those payments. In some instances, it could be as simple as invoices, any sort of receipts that you have, contracts. If there's requests for reimbursement, if you're in a contract for some sort of road project and they're requesting funding showing, percentage completion and what they've done there, keeping those requests for reimbursement to support the fact that you were paying them after those services were rendered. So all of those things are really important to make sure that you're maintaining in your records. If you're not sure, you can always reach out to your auditor, to our office, to see if those are things that maybe need to be retained. But really, if you just look at it from the perspective of, would that document be needed to show that you met a compliance requirement? If that answer is yes, then just make sure that you keep it, because likely the auditors could be requesting to get that from you. We went through some of our recent audits and came up with some common findings that we found in our own single audits, and wanted to give some tips for what you could do to try to prevent that from happening in the future, or prevent it from happening at your entity. We found this in counties with the ARPA funds, but it really does apply with any program at any entity. Improper reporting of expenditures. So we're finding that the federal expenditures that are being reported on the federal reports that go to the feds are incorrect. So the problem is within your ledgers, within your accounting records, there is not a designation of which expenses apply to which program. So when you're going and doing those reports, pulling that information and putting it on the report it's not working, right? So it's important that when you're getting federal funds, that you've kind of identified how are you going to differentiate to know that this is federal spending versus non-federal spending. That way, when you're doing your federal reporting, you can do an easy double check by looking and saying everything with this specific coding applies to this program. Did I account for all of that? The other side of doing this or struggling to do this correctly is you could be missing out on federal reimbursements. So if you're pulling from your ledger to see what you've spent on a federal program and comparing that to what you've drawn down from the federal government, or for what you've requested from a state agency or another entity, you could be missing some of that. So you could be covering costs with some of your local dollars that you wouldn't need to be, because you're missing expenses that apply to a federal program. So it's really important to kind of figure out how you can differentiate those expenses within your accounting records. The next one would be non-compliance with subrecipient grant agreements. So if you're receiving any sort of federal funding and you're going and you're giving them to somebody else, so you're a county giving it to a city, you're a city giving it to a township, and they are required to meet compliance requirements, making sure that you are communicating what the expectation is to those subrecipients, and communicating what those requirements are so they know that that's what they need to be meeting. And prior to giving the funding, making sure that you have your own procedures and processes in place to monitor and make sure that's happening, whether it's making sure your grant award documents you give to them contain all the required elements, whether there's going to be certain additional documentation that needs to be provided when they do their request for funding from you. Making sure that all that's in place at the beginning makes it much easier to monitor as it's going on. Because once the money goes out the door, it's hard to determine and put those processes in place. So you can end up at a risk of having a finding like this in your report. The next one is also still related to ARPA. ARPA has several cost classifications, so different categories that you can request reimbursement for. And we've found that, especially in premium pay, that there are expenses that aren't meeting those specific requirements that the feds have outlined. So the problem there is you can have two things. If you're classifying something that doesn't meet the requirement, that becomes an allowable cost, or an unallowable cost, right? That becomes a question cost and a finding because it doesn't meet the requirements. The second piece is those breakouts of reporting, those different classifications that the feds have said that you can spend on, need to be reported in your federal reports. So you could be reporting them improperly to the feds for saying what classification of expenditures you had. So it's two different types of findings and two different impacts, right? So if you, let's say, said something was premium pay, and it doesn't actually qualify under another category, you could have an allowable cost, an unallowable cost. It could be a question cost and a finding. If, let's say, you classified it as premium pay, but we could say it falls under another category, you wouldn't have a question cost problem, but you could end up with a reporting problem, meaning you put it under the wrong category to the feds, so that could result in a finding for you. The next finding for schools is related to impact aid. It'll be kind of referred to as Davis-Bacon. So some of those construction projects have wage requirements. So what wage requirements really are is a federal minimum hourly rate. So that's the expectation that contractors pay their staff at that minimum rate. So what we found is that either we can't determine whether those contractors were actually meeting those minimum wage requirements, or they aren't actually meeting them. So that again can become a problem because you're not complying with those wage rate requirements. That becomes a finding. But a way to prevent that is just making sure when you're doing your contracting process that you're communicating clearly with those potential contractors of what those minimum wage requirements are. And then once you're going through with a contract, that you have determined how you're going to get that information back from them. So what type of documentation are you going to require them to submit to support the fact that they met those minimum wage requirements? Because you're going to need to get something to support that. If the auditor comes in and there is a minimum wage rate requirement, they're going to want to see whatever you saw to show that they actually met that requirement. Another finding, and this really relates to one of the areas for preparation, a lack of supporting documentation. We end up seeing a lot of findings where documentation doesn't exist, so we can't determine whether the expenses were allowable. There isn't documentation to support reports. This can be a big one because depending on what your accounting systems allow, if you're having to pull a report at a point in time, because any time after that it will be different, you're going to want to retain whatever support you use to prepare your federal reports, because you couldn't pull that information again for your auditor to be able to see what you did. So those things all need to be maintained in some sort of file. So when they pull reports, that they can see how you came up with your numbers. If you made a payment, that they can see that it was allowable, that you can see the time period that it was in period of performance. You can see what type of funding sources, all of those things. So you're going to want to make sure that all of that supporting documentation does exist. The other big area here is related to internal controls. Internal controls are a big part of single audits. The feds have really specific requirements for the auditors when it comes to documenting internal controls and testing internal controls. So the single audit does require that your auditor does a test of internal controls and is able to conclude on operating effectiveness of internal controls for each significant compliance requirement. So what we're finding is that the internal controls are not necessarily in place. And it doesn't have to be anything significant, right? Internal controls are basically just some sort of process to make sure that you would either prevent noncompliance or detect noncompliance. So whether that is designating a person that is knowledgeable of compliance requirements to approve payments or review reports. If there's system edit checks that can be put in place to prevent overpayments, or there's all sorts of different things, but it's making sure that you evaluate what your processes are for each of your federal programs, making sure that you have procedures in place to be able to prevent or detect noncompliance. That would prevent you from getting some sort of internal control finding. We got a couple tips and tricks here to kind of keep you being prepared for your upcoming single audits. Kind of been beating this one to death here, is keeping track of all of your support, whether that's support for your reports, support for your payments. If you have any sort of special test, special tests are some sort of specific requirement. Maybe if there's a special test related to road projects saying that the asphalt has to be mixed in a certain percentage, having record that you did that, right? So anything that you have to support that you met all the compliance requirements that are applicable to your programs, regardless of whether the auditors are going to have to look at them or not, right? So regardless of whether they're a pick 6 in the compliance supplement, you want to make sure that you're just in the habit of retaining those documents, because like we said, those change every year, and unfortunately they aren't published ahead of time. So if you're going based on the compliance supplement, the 2024 compliance supplement was just released here, I believe, in April, which is at the end of fiscal year 2024. So you already would have done all of your spending and done all of your things for your program pretty much. And if they then switched what they're going to have the auditors look at, you maybe would not have all of your documentation. So make sure you have documentation for all compliance requirements. Establishing a process of internal controls, just evaluating all of your processes. Like I said, it doesn't have to be anything over the top, not a ton of extra steps, just making sure that you can prevent or detect non-compliance there. Looking at your compliance supplement, if there is one, it can be a quick little guide that can be used, especially if you maybe are new in your position and you haven't had a single audit, or you're not as familiar with the federal program, or in instances where you're getting new federal awards. Sometimes you're getting one-time grants, sometimes you're getting things sporadically where you get it once every 5 to 10 years. It can be helpful to go back to those compliance supplements. And the last one here is related to single audit costs. Looking at your grant awards, some do allow you to use your federal program funds to pay for your single audit. So if your federal program does allow you to pay for that with those federal funds, it could prevent you from having to use some of your local dollars on that federal single audit. Obviously, that's going to be more dependent on, if it's a one-time grant, it probably isn't going to work timing-wise with your period of availability and the timing of your audit. But it is, if it's a recurring program that you're getting every single year, there might be a possibility that you could use those funds to pay for your federal portion of your audit that your auditors do. Yeah, that's all I have. We'll be back with a panel this afternoon. So if you have any questions, you can pop them in the chat and we can kind of address them for you then. Thanks.